Welcome to Crypto Pulse Weekly, your weekly overview of the market and analysis of price action. As usual, I'll be going through what has happened in the market this week, our immediate market outlook, and what is going to happen in the coming weeks. As expected, we will run through our usual agenda items, which are the market updates, the vital signs, the crypto drip, and the Q&A. Today is a particularly challenging one because there is Euro 2020. And as a matter of fact, uh, I considered not doing it or postponing it altogether. Well, I just felt that there might be some people who will be interested in the information we have to share. So welcome to Crypto Pulse Weekly once again. This is about our 42nd episode. So without wasting much time, let's get started. So on the market updates this week, a couple of things are particularly standing out from what we've seen on the market this week. One is that, as we predicted last week and early this week, was that the price of Bitcoin was not likely to close below the 12-month moving average. And I think I started mentioning that beginning of last week. Then I think I shared it on the WhatsApp group again during the beginning of the week as well. That from the way things are looking with the price of Bitcoin, it looks like we might be hitting on the bottom. Now, a number of things that have happened since then, and I'm just trying to put up my Bitcoin chart on the side here. I think I should use this one. Yeah. A number of things that's happened since we last had that discussion. So on Friday last week, we had the largest amount of 24-hour short position opened on Bitfinex. And I remember saying then that Bitfinex were the biggest market manipulators because they do have significant institutional clientele and very huge whales that trade on Bitfinex. And what I was initially concerned about then was that maybe there was some data they had that other people didn't have, that they were shorting Bitcoin at, I think, 36,000 with $1 billion. But as it turns out, most of that position had been closed by 24 hours later. And of course, that was reflected in the gain in price that we saw from 30,000. I mean, actually from 30,100, which is the lowest bottom from the previous bottoms that we have. But having said that, what I was actually referring to earlier today in the fact that Bitcoin has not succeeded in closing below the 12-month moving average. So I just decided to bring up the charts prematurely. This red line is the 12-month moving average for the price of Bitcoin. And as you can see, I'm displaying the weekly chart so you can see how many times in the last 6 weeks that it has actually tried this line and it's not succeeded. So 1, 2, 3, 4, 5, 6, 7. This is the 7th. And from the look of things, the week is about to end, basically in 2 days' time. We've still not succeeded in breaking through. If you switch back to monthly, and I just decided to bring this up prematurely, this is what I've been talking about, that we've had 3 months of drop, and even the 3rd month starting has attempted to test that line of support and has not succeeded. One thing to keep in mind is, even if the price does go lower than 30K, it's not likely to stay there for up to 24 hours because of the significance of that particular buying line. Because what it means, in essence, is that if the price crosses the 12-month moving average, it means that you can expect that at least for another 3 months, the price is going to keep going down. In the history of Bitcoin, most of the time when you have a down market or you have a correction in a bull run, it usually lasts for about 3 months. So we've had 3 months of drawdowns significantly. And I think the market is ripe for a retracement and a reversal. So in terms of the market volatility, we do have some volatility. We have very low volumes, though, I must say, and that's because many people who are short-term retailers and what the Bitcoin community calls the weak hands have sold their Bitcoins at a short. And like one of my friends said, that many people won't confess now that they sold out at a short of the market until the price gets back to 70K. That's when people start screaming that, I sold at 40 or I sold at 30. Anyways, what we're seeing here, if I was to give you the book, sorry, I had to bring this up again because I need to explain the sentiment. What we're seeing here is that there's a significant amount of consolidation. So this is a daily chart showing you that we've just been bouncing up and down on this monthly, 12 monthly moving average, which is around 33,300 right now. When you see this kind of movement, when the price is just going in ranges, basically it means that there is accumulation and there is a sort of possible trend reversal or change in bias. Now, because we know that long term, which is if we switch over to the monthly, we're still on a long-term bullish trend. And as a matter of fact, if you plotted a logarithmic scale for the price of Bitcoin since the beginning of its pricing in 2009, you find out that we're actually in a sort of a big, giant, long-term trend, uptrend. So whatever is happening in the short term is really not important because at the end of the day, the price is still going to go up. Like somebody was given an analogy yesterday. If you invested in Facebook or let's say Google in 10 years ago, you probably have made 6 times your money because if you invested $1, you'll have been $6. However, if you invested that same $1 in Bitcoins 10 years ago, it would be over 100,000, way over 100,000 actually right now. So in the same vein, when the price dropped down to 3,500 or 4,000 pounds and dollars last year during the inception of COVID, if you bought Bitcoin at that time, right now, you are still 10 times the value of your initial investments. So that's what I've been trying to say since the beginning of this short-term downtrend, that whatever the correction is, you need to put it in perspective. So when the press reports that the price of Bitcoin has crashed by 50%, you should ask yourself, what's the frame of reference? Of course, the frame of reference is the most recent high at almost 65,000. Forgetting that at the beginning of this year, on the 1st of January, the price of Bitcoin was still less than 30K. So it's important to put this in perspective because where the price is going in the next 3 to 4 months is not going to bear any resemblance to where the price is currently. And I mean, I can't say this enough for people who are very emotional and are new onto the market. I've told you, you best, not to watch your portfolio or probably delete your portfolio for a time being so that you don't give yourself too much emotional trauma. And I say this because market makers orchestrate the markets in a way to maximize their own profits, not your own profit as a retailer. Now, for them to maximize their own profits, it means that they need to move the price in such a way that it wears you out. Basically, if you're trying to follow the price like a cat following a laser beam or a dog following a tennis ball, they wear you out because you're emotionally ping-ponging, following the price and watching what's going up and down, but you're forgetting to zoom out and look at the longer-term trend. So right now, we have the overhead resistance at 41K is still very much intact. I expect that over the next couple of days, we'll attempt to reach 41K. We have a trend line at 41K. We have the upper edge of a standard deviation of price at 41K as well. So it's inevitable or it's invariable that we're going to see price attempt those levels again. In terms of sentiment, the sentiment's a bit mixed because I think retail is still fearful that maybe we're still going lower, and institutions are, I want to say, cautiously accumulating. What do I mean by that? They're not weighing in on the markets, like buying on the markets. So even the ones that are buying on the market, what they're doing is they're placing small pending orders at key resistance or key support like 28,000, 28.5, 29,000, such that when the market dips to those levels, the others are getting filled up, and even 30,000. So they're not buying at a bulk because institutions don't want to push up the price because it pays them to buy at a cheaper price. So when the whales or market movers like Bitfinex short the markets, the institution just waits to silently accumulate without making noise. In terms of regulation, we have El Salvador launching the Bitcoin legal tender implementation in September. This is very huge. I'm going to talk about this later because this is going to change the dynamics of macroeconomics globally. And what will happen with El Salvador in the next 5 years is going to be the model for many developing countries in the years to come. It's a shame, really, that a country as forward-looking, as progressive as Nigeria, for instance, will not be the one at the forefront of this, given the fact that we have the largest volume of peer-to-peer Bitcoin transaction in the world. Unfortunately, we've not been able to position ourselves accordingly in adoption of this technology. So I think El Salvador's case study is going to be very massive one, and it's probably going to signify the end of central banking as we know it. But fingers crossed. I'll come back to that shortly after now. The other part of regulation I wanted to talk about, actually two of them. One of them is this Iran's bill to regulate crypto. It's funny because Iran last year was offering to buy Bitcoin directly from miners within Iran. So I think what they were trying to do then was to identify, miners within Iran and try to buy from them and avoid them selling out to the open market. If you don't know, if you don't remember, Iran is on most countries' embargo list. So most countries don't trade with Iran because of the embargo that the United States has placed on them. But what's interesting is that things like Bitcoin actually takes people out of that embargo, because if you can find someone who's ready to trade with you on the Bitcoin network, then you don't bloody need the US dollar. You can just bypass the US dollar. And if not the fact that Iran is an authoritarian regime and they are not so progressive, actually they will have benefited from rolling on to the Bitcoin network, because I've been issued. They will have completely sidetracked the petrodollar and the restrictions that the United States is going to put on them. But I'm going to talk about that. I'm going to talk about that later. I think it's a very interesting story in the era of post-Trump USA. So first focus on El Salvador. If you remember the last time I said that they passed the law to make Bitcoin the legal tender in the month of June. And since then, they've started, various ways of trying to implement. They've mobilized 1,500 ATMs, Bitcoin ATMs, to be used all over the country. They've had what we call an airdrop. They have a $30 airdrop for all these adult citizens who would download the government's Bitcoin app and register their identity. Basically, try to collect data from the citizenry. They're also trying to build a geothermal Bitcoin mining hub. And one of the few things I find interesting is that as they're planning to launch in the first week of September, all of a sudden, America is naming, the leaders of Latin America. USA is naming the leaders of Latin America on their corrupt list. And when I saw that this afternoon, I actually laughed because I'm like, the United States doesn't have any moral right to label anybody corrupt again. After what we've witnessed in the era of Trump, I don't think, frankly, personal opinion, I don't think the United States has any moral ground to label anybody as corrupt, because we saw corruption, frank corruption firsthand. But what this is going to do for many of these guys that the US will try to administer punitive measures to is that they're basically going to sidetrack the US completely. So what's going to happen with this implementation in El Salvador is all companies and traders and retail within that country will be required to have a point of sale terminal that can collect payments in Bitcoin. That's quite easy because all you have to do is display a QR code and you can easily pay through a QR code. And there's a company called Stripe that's actually been operating within El Salvador in the e-commerce space. It's a digital fintech, and they're actually they're actually the ones that front ran this bill. So basically what they did was they started distributing the app to the people in the local environment. And because of that, people found out that they were able to get remittances from, places like USA and Canada to El Salvador. You know how it is when, you have relatives that are working in developed countries that send home money to the developing countries, just like we have Nigeria. So it helped their remittances significantly. And what this is going to do, this is going to suck the money out of developed countries. I'm really very interested. I'm keeping a very close eye on the El Salvador case study because it is the typical scenario of Bitcoin mopping up the current financial structure. Because what's going to happen is once they start using Bitcoin as the legal tender and they start mining, it means that you have more support than ever for the Bitcoin network. 1, 2, it means that the Bitcoin network will not run out of liquidity and will not run out of new users. So you will sort of have, I don't want to use the word never ending, but you sort of have a never ending bull run. So you have corrections, but the bull run will keep going on because there are many new users that will be coming on every day because of countries like El Salvador. And you have people like Paraguay, Mexico, what's the name of these other guys that are already, Chile and Argentina and Brazil, they're already looking at how they can also migrate to partly using, Bitcoin as a legal tender. And it's not far-fetched. You need to understand what is going on in the world. And like somebody just said, I'm not going to the US. It doesn't have anything to do with going to the US. It's just that, well, what US has done at the time when they did it, it was good. Meaning, they converted the gold standard, they converted the US dollar to the global monetary standard. And everybody was using US Reserve Bank. But what has happened since then is that it's allowed the US to sort of print as much money as they wanted. So it's developed their own economy, basically at the expense of most other economies in the world. What do I mean? So Nigeria, for instance, or all oil producing countries collect their remittances in US dollars. Everybody that sell oil collect their remittances in US dollars. Everybody that trades globally trades in the US dollar. However, the US has the monopoly to determine the monetary policy for themselves. By so doing, they have determined the monetary policy for the rest of the world. Meaning, just like the US printed 25% of the total supply of all dollars in circulation in the last 1 year, we have a situation where now everybody that has US dollar in their reserve, the value of their US dollar has just gone down by 25%. That's exactly what's happened in the last 1 year. So if you had $100,000 in your bank account anywhere in the world, in the last 1 year, your dollar has lost 25% of its purchasing power. Now, if you are a developing country that you are struggling and only getting by based on either your resource, which could be oil or minerals, or something else that you are selling to the developed world, it means that your wealth is getting diminished by the day by no action of yours. And that's why I say that if people are thinking in Nigeria, you'll understand that this is something that way outgrows or outlasts anybody. It's about sovereign wealth and the ability of either a country or an individual to retain their wealth. Because as long as you're keeping your wealth in US dollar, what it means is that whatever the monetary policy with the Federal Reserve Bank says is what's going to happen to your money. So it's one of the reasons I'm really passionate about this El Salvador case study, because it's going to quickly show the rest of the world that really and truly this current dollar-based system is crap. And of course, they already have their own headwinds. Last week I was telling you that IMF refused to help them. World Bank says in fact, what World Bank said is so ridiculous. World Bank said there is transparency concerns. That's exactly what World Bank said, that there is transparency concerns with them migrating to Bitcoin. I'm like, what transparency? Bitcoin is the most transparent monetary policy you can ever have. in any, in any system currently. And they've refused to help them, but they're still going ahead. And what I think will happen, like I said on the WhatsApp group, is I think the market is going to front run this adoption. We're going to see a spike because usually the market will, buy the rumor and sell the news. So most likely you see the price begin to pick up, especially in August, because that means, it's just 1 month away from them adopting Bitcoin. And adopting Bitcoin means they'll probably split their country's reserve, depending on their central bank policy. They probably split their country's reserve into 50% or do a 60-40, meaning half in Bitcoin, half in US dollars. But it will be very obvious because whatever half is sitting in Bitcoin is quickly going to outgrow the other half, which is what's happening to people like MicroStrategy that that are benefiting of this gain in the market capitalization of Bitcoin. So this is massive news. It's not reflected on the market yet, and I think the financial institutions are in bed with the market makers to ensure that the price doesn't overinflate before this kind of adoption. But this kind of adoption is going to inflate the price, whichever way. In another news, Grayscale, I talk about Grayscale a lot. So because Grayscale is one of the first institutions that have actually made Bitcoin mainstream. So in December 2019, once they obtained the permission from SEC, they created this fund called the Bitcoin Trust. Now, the Grayscale Bitcoin Trust will usually sell at a premium over and above the price of Bitcoin. And it was always oversubscribed up until, apart from March last year and apart from the last 6 weeks, Bitcoin Trusts have always been oversubscribed and have always sold at a premium. But right now, it's been selling at a discount, and institutions have literally bought up all the ones that were offloaded in the month of June. There were 82,000 plus Bitcoins, Bitcoin Trust that were tied to Bitcoin Trust that were offloaded last month. And they've all been bought up. The price has not gone below 30K and the price has not gone up, meaning that either the people just rolled over their Bitcoin investment or basically had ready buyers in the institutions, because a lot of institutions were buying the Bitcoin Trust when the price was dipping or each time the price dipped. So these same guys, as I told you 2 weeks ago, they added about 13 cryptos into their basket of cryptocurrency trusts. And now they've scaled up on Cardano. So they said they sold off some and then they bought Cardano. They didn't say what they sold, but I think they probably sold off some Bitcoin and some Ethereum in their holding to buy more Cardano. If you have been on this channel for more than, at least in the beginning of this year, you'll have heard me talk about Cardano in one of these coin spotlights. Cardano is a smart contract network like Ethereum. It's much more nerdy in that the founder is a geek. He's a proper geek. It's not Vitalik is a geek as well, but it's not really pushed by the market. So the roadmap that Cardano set out since 2017 is the same roadmap that they've been following. They've not failed in their timelines and they've not shifted ground. So the time they've said they're going to launch their upgrades, at the time they've launched their upgrades. Now, much to the dismay of, many of the crypto communities who have wanted, Cardano to really blow since 2017, they've not really been pushed by any of those pressures. But I think they're here for a long time. I think they're going to give Ethereum some good run for their money in terms of competition. I think Polkadot is going to do that as well, but Polkadot is already fully monetized. It's almost like a blockchain setup with a business mindset. Cardano is still largely centralized and it's still largely complete technology focused. So it's not really driven by the money, if I may say, but it's a very good project. We're going to start seeing projects on Cardano from this quarter, definitely this quarter. So right now, of course, Grayscale has put them on the map again by saying that they have their third largest holding in Cardano. MicroStrategy and Bitcoin Mining Council. If you remember what happened back in, that was April now, yeah. April when Elon Musk started the decline of the price of Bitcoin by saying that there were environmental concerns, and then the market started to crash. Well, in retrospect, two things I learned from that episode. One was that everybody will do what's convenient for them, and two, the market is very sensitive to issues of how do I put it now? Issues that are political. Well, how do I mean? The issues of climate change has become not just scientific; it's now become a political issue. Um, if you take a cross spectrum of views from places like United States, you have a rights wing saying that this is just conspiracy and exaggeration. The climate has always been changing. Then on the other hand, you have people saying, I mean, look at the data and look at the science. The Earth is changing, the climate and the seasons are becoming irregular, the global temperature is warming. Like most things, that are problems or like large scale problems. My personal insight is that when people come up with solutions, they come up with solutions that take you away from the crux of the problem and try to fix the symptoms. Maybe because I have a medical background, and I think I tend to look at things from pathophysiology, what actually went wrong versus what are we trying to deal with. So if, for instance, somebody has, and I use this example a lot because when I was in medical school, I was told that diabetes was a debilitating degenerative disease, that you couldn't come out of it, especially type 2 diabetes. Then a decade later, I found out that you can actually manage people out of that and completely cure them of this type 2 diabetes that was said that was not curable. And the reason being that the management therapy or the management regimen that was directed towards treating that disease was not addressing the primary problem. So the primary problem was a problem of the body becoming resistant to insulin. But what most of the drug does is to make the body either absorb more insulin or produce more insulin by way of injection. Sorry for the diversion. I'm going to use a business example now. So think about a business that has declining sales. As a result, the profit and loss is not looking good. Then they bring in this smart key, and the smart key says, since all we need to do is to show that we are profitable year on year, let us move things around. They call it financial engineering. Let us start by cutting our costs in terms of employee costs. So we cut employee costs, we reduce production. We've not necessarily increased sales. What we've done is just make the company look better by moving the variables around. So when you move the variables around like that, of course, you're going to have quarter on quarter increase in your P&L. Your balance sheet is going to look good. And because of that, you might be able to get more sentiment out of the stock market, especially with a publicly quoted company. Why have I used this example? I've used this example so that you understand what's going on with climate change. So we say climate change is caused by CO2 emission, right? The address or the solution to that is not just reduction of emission. We are already at an advanced stage of human civilization that we have enough CO2 capture technology that we can deploy all over the world very rapidly too, that will take care of that. But what are we doing? We're creating alternative industry as a solution to climate change, which is going to cause its own problem probably in another 100 years. How do I mean? So for climate change, we say we are creating electric cars that are still using fossil fuel, which you say is not sustainable, to charge them. Then their batteries are not recyclable in any way. We're going to be dumping those batteries in landfills all over the world and creating toxic chemicals in the soil. So we're not solving the problem. That's where I'm going. Sorry about the diversion on climate change, but I just felt I needed to talk about that because I see that, anytime people talk about climate and talk about sustainability, people are just flinging around the world. And because most people are not knowledgeable to understand the science and what's going on, people just get swayed. So in the same vein, what has happened with the Bitcoin climate change or sustainability crisis? Elon Musk comes out and say he doesn't think that Bitcoin is eco-friendly. Meanwhile, more than 50%, even before he said that, more than 50% of Bitcoin mining in the world were taking place around areas where you will have hitherto have energy loss. What do I mean? Most of them were either at hydroelectric power plants or areas around wind farms or solar farms. The ones that were situated to near fossil electric power sources, they were situated there and collecting power that would have otherwise been lost. So if you think about physics and how power is being transmitted using the principle of physics, you know that once power goes over a long distance, it loses its current. So for you to get power from point A to point B over a long period of time, you need to scale up the power and make it high tension. Now, the process of making it high tension, you lose the power, you lose some energy. The process of transporting it, you lose some energy as well. So when you move from a power plant to a step-down plant in a city, you've lost at least 25% of that power. What Bitcoin miners are doing is they go to the power plants and say, instead of you wasting that 25%, give us that 25%. Let us use that 25% to mine and we'll pay you. So they're actually doing the energy sector a service, really, by situating their mining rigs close to those power plants and using hydroelectricity. So when this talk came up, I was very, very upset because it didn't make sense. It was just bollocks. And for the fact that Elon Musk, who's supposed to be a rocket scientist and understand physics and everything, is supposed to know that that's not true. But we later found out, of course, that his company is benefiting from what you call carbon credits. And basically, that's how Tesla has been profitable before this year, selling carbon credits on the open market. So what happens is because they are, quote unquote, operating in an renewable energy sector, they get carbon credits for every month of their operation. And those carbon credits are tradable on the open market, one. Two, for companies that are burning fossil fuel, they get negative carbon credits. And for them to offset their emission, they usually go on the open market and buy. So it's almost like a carbon tax in reverse. So companies like Shell, what's these other guys, the BP, Saudi Aramco, all those guys need to go on the open market to buy carbon credits to offset their carbon emission. So what I'm saying is that they've created an entire industry and commercialized that industry based on a solution, based on a problem that has a solution, and nobody wants to talk about the solution. I'm not a climate scientist, so I'm not going to talk about the solution on this call, but really, it's just commercialization of a new problem. And unfortunately, because Bitcoin has been in the limelight, it took the heat for that. Of course, MicroStrategy and Michael Saylor decided to sort of take a proactive action then and form what you call a Bitcoin mining council. So they got all the biggest miners that chose to identify themselves together, met with Elon Musk, met with Michael Saylor and said, you know what, we need to make our mining operations more transparent in terms of how do we source for power. And then, of course, by the time they did the analysis, even at that time, they were already slightly over 50%, meaning half of the mining power in the Bitcoin network was coming from hydro and many other renewable sources. Because really and truly, you can't use normal fossil fuel, except you are in China or in Kazakhstan or some remote places. You can't use normal fossil fuel to mine Bitcoin and be profitable because of the amount you have to pay for the power. But for the people who are situated close to hydro, or a country like, which country is that now? Country like El Salvador that have geothermal. So geothermal is power drawn from volcanic heat. So instead of using water to power the turbines, you use steam to power the turbines, and then you connect the dots to an underlying active volcano that pumps the steam upward, and you power the turbine those ways. So those are the only ways that makes it cheap to actually mine Bitcoin. Otherwise, even for a sophisticated mining company, they'll be incurring huge losses just trying to connect to a normal power grid. So now they've come out with a report saying, yes, Bitcoin is one of the most sustainable, Bitcoin mining is one of the most sustainable industry in that the emission is already more, or is already more than 52% in terms of global emission. In the same way, in the same vein, BlackRock, if you've heard me talk about BlackRock, one of the biggest investment companies in the world, are now saying it looks like Bitcoin is actually sustainable. Meanwhile, in April, they were saying that they have concerns that it's not sustainable. So again, I would say, don't look at what they're saying, look at what they're doing. In the last 8 weeks, we've had more than 200,000 Bitcoin exchange hands from, the panic sellers to the people who are accumulating. And the people who are accumulating are still accumulating. In another news, JP Morgan disclosed to one of their sources that they've already staked over $40 million in Ethereum. If you don't know, Ethereum is migrating to what I call Ethereum 2.0. So they're going to be it's almost a hard fork. It is a hard fork, really, because it's an upgrade of the network that is going to jettison some of the behavior of the old network. So this upgrade, they call it the London upgrade. The upgrade on Ethereum coming up this month is going to break up the Ethereum network in such a way that when transaction charges are taken, a part of it is going to be burned, meaning a part of that transaction charge is going to be taken completely out of circulation from the Ethereum network. Before now, Ethereum network has been inflationary by about 2%, 2.5% annually. But this will reduce the inflation and actually start to make Ethereum deflationary. And because you also can earn, quote unquote, from staking Ethereum, if you have up to 32 Ethereum, it's a better, especially for institutions, it's a better story, it's a better way of playing in the market other than trading. So they could just hold Ethereum. It's getting deflationary at the same time. They're getting paid interest in Ethereum. So JP Morgan has already, front run the market. These are the same guys that were telling people that cryptocurrencies are too risky for them. So now they have 40 million plus in Ethereum. So I just brought that up to let people know what's up in the background. Same thing, this guy, SoftBank is one of the biggest electronic banks in the world. The Japanese, I think, yeah, there's a Japanese electronic bank, and they're literally the biggest in the world, in fairness. And now they're buying up essentially significant amount of Brazil's biggest cryptocurrency exchange. Mercado Bitcoin is Brazil's biggest cryptocurrency exchange. They're buying them up. So for me, when I see the price, I watch what the big guys are doing. I watch what the market makers are doing. And if the market makers are not pulling out of the market, then it means that whatever is happening in the forefront is just a facade. Like I said, it's a magician's trick. Take your eyes off, what's really happening, and then carry out the trick in the background, and then you're completely thrown off balance. So the whales are accumulating. Binance is 4 years today, and interesting stuff about Binance, actually. I remember a story a friend of mine told me that when Binance started, they were giving people airdrops. Airdrop is like freebies. They were giving people airdrops of maybe like 100 units or so of Binance to people that signed up with them. And in 4 years, Binance has grown from that free airdrop exchange to literally the biggest exchange in the world. They're like 4 times the size of Coinbase. What am I saying? No, they are 8 times the size of Coinbase, actually. Yeah, Binance is just 4 years. It's incredible. They are 8 times the size of Coinbase. And, the story is quite inspiring as well. The guy who founded Binance, CZ, as we call him, Chen Zhao, he sold his house. He said he's a Chinese-born, Canadian-trained guy. When he got into Bitcoin, he sold his house to start up the Binance exchange, and he said that his friends were making fun of him that he sold what he can see for what he couldn't see, and now within that space of time that he started the exchange till now, they become the biggest. The market capitalization of Binance is 4 times that of Coinbase. So kudos to Binance. Regardless of the problems that they're having. So right now, there are about 3 different countries where there is news that the regulators are either warning them or fining them or attacking them or planning to file charges against them for one thing or the other. But you see, whoever advised Binance at the beginning was a very, very smart person. I suspect the person must be a US lawyer of some sort, because the organizational setup in terms of legal entity responsibilities or liabilities is very, very tactical. So for each country that Binance has major operations, they have a separate legal entity holding their operations within that country. So if, for instance, Binance in the US is basically Binance US. Binance in Turkey is Binance Turkey. As a matter of fact, there's a company called Binance Markets, which is supposed to be like Binance UK. That company was acquired in the last 9 months, if my memory serves me right. It was an FCA registered company in the UK that got acquired. And that's why there is news about Binance being banned in the UK. That's not really what was happening. And I'm going to talk about that. I'm going to talk about that later, just to explain what happened. But because Binance already had that, local company that they bought over, the FCA is trying to say, no, you can't use that local company as a launch pad, and want them to go through a different set of regulations. But I will explain that shortly. Another news is our dear friend Bishop Musk, the Doge father, about, I think that was yesterday, that was talking about let the Doge out or something like that, and people thought we were talking about Doge, not knowing that there was another coin called Baby Doge. I wasn't even interested, but apparently Doge pumped significantly, and some people got into it not knowing that it wasn't Doge coin that he was talking about. There was another coin called Baby Doge. But anyways, for fans of Elon Musk, I think the people that had their Doge, the people that had Dogecoin that were holding the bags had an opportunity to sell yesterday. And like I say, I mean, even though Dogecoin is completely useless for all intent and purpose, if you're holding the bag, my advice to you would be to set a pending order at a point that at least you're profitable. So let's say you're holding the bag at, I don't know what Dogecoin is now. Let's say you bought it at 20 cents. If you bought it at 20 cents and it's doing, somebody said it didn't get a profit. It didn't get to the point where you could make profits. Yeah, what I'm saying is, regardless of when you bought it, if you bought it at so it's 24 cents now. So let's say you bought at 60 cents, yeah, which is what it was around. Let's even say that you bought the top. Let's say you bought at 69 cents, which is what it was at the peak in May. What I'm saying is, set it to probably like 75 or set it to like 80, such that if there's a price spike, because that's what usually happens with this kind of shit coins, as we call them. If there's a price spike to that level and the order book is light, I will explain what I mean by that. There are chances that your pending order will get hit. So on a centralized exchange, you have what you call the order book market making. What does this mean? In a centralized exchange, there are buyers and there are sellers. There are market maker buyers and there are market maker sellers. Those are the people who want to sell their tokens or coins at specific prices, and they've made up their mind and they've set those tokens at those prices. So maybe somebody had bought their Doge at 10 cents and has set 70 cents. And I started off, let's say he started saying, I'm going to start selling from 30 cents and say, I'll sell 10 at 30 cents, I'll sell 10 at 40, 10 at 50, 10 at 60, 10 at 70. What will happen is all those pending orders will be registered on the order book on the exchange without expiry. So anytime the market goes there, it's automatically going to execute that order. Why? When you are placing an order on the market is first going to look at the next available price on the order book. So right now, the price of Dogecoin is around 24 cents. If I want to buy now, the order book will show me that the next available is maybe like 24.2 or 24.3, 24.3 cents, because people have already placed order there. So users or retailers like me and you will have placed orders there. Then the exchanges themselves, through their algorithm and bots, will have placed orders to sell their own lots too at a profit. So what I'm saying is, if you are holding the bags, you are better off setting a pending order, because what it means is that if, for instance, some fabulous news gets on the market for Dogecoin, and then there's a huge spike in demand, that huge spike in demand will quickly eradicate what's on the order book. And if you've already set your pending order, it's going to hit that pending order as well. So that's the way to play shit coins. If you're caught holding the bag, if you're caught holding the bag, just set your pending order. You don't need to be there. If you set the pending order and it's there already, anytime the market gets there, it's going to take off. It's going to execute your pending order. If you're the first, let me use that word. That's the only condition. If you're the first to set that price. So in the order book, if there are 15 people that set their price to sell at 70 cents, it's going to line them up according to how they raise the order. So if somebody is saying, I want to buy 5 billion units, buy by the market, and put all of that on the exchange, what will then happen is the market will try to consume everything on the sales side of the order book. If it's not up to 5 billion, it keeps going up. So usually what the market makers do is their systems look at all the things that are on the order book, then areas where they have gap, they plug it with their own orders and they fill it and they line it up all the way up. So if any big major shifts happen and there's a huge spike in volume, automatically the market just starts consuming the order book upward. So that's the only way to get out of a bag holding scenario if you are holding the bag for any shitcoin, because bearing in mind that we're still at the early stages. I mean, I don't invest in Doge. I think it's completely useless. And I think, what gets at me is the fact that it's completely constantly inflationary. You produce over 10 million units every day. So I don't think it makes sense to get my money stuck there. I'm not saying you're not gonna make your money back, because any day Elon Musk talks about it in the next 3 months, you're gonna see a price spike. And if it wasn't that, we're right now in a correction, that spike will have been more than what it was yesterday. So that's about that in terms of Dogecoin and how to get yourself out of a bag holding scenario with Dogecoin. My coin point live for today is Bakery Swap. The reason I'm choosing Bakery Swap is that I got info about Bakery Swap in January, but I didn't really invest in it until I think February. But in terms of performance, I must say, as a matter of fact, Bakery Swap is one of the most performing, or has been one of the most performing assets I bought this year. So let's see, no, 3 months is not good enough. Let's see, January. Yeah, let's see, January. Oh no, sorry about that. So it started in November 2020, and I heard about it. Yeah, so I heard about it somewhere around here, but I didn't take any note of it until somewhere around here, which was 40 cents. I think I bought around between 20 and 40 cents in February. When it got here, I think when it was around 3 cents, I just checked one day and I saw that. I mean, I bought it like 200 and I saw that it was already like 2K or something very crazy. So I said, oh, let me just take out my profit. So I took out half of that. And then I came back a week later and it was somewhere around here. Must have been somewhere around here. Then it was double again. I'm like, okay, this is going somewhere. I think I took out some of it again, but basically it's a DeFi token that has their own DeFi exchange called Bakery Swap. It was launched through Binance, I think, and I think it's doing very well. So this is a typical parabolic move. It's done the parabola. It's cooling down now. It's currently trading below $2. I think it has a significant upside. If it goes back to all-time high, which is definitely going to, that will be 300% from current price. Yeah, more than actually. It's 1.6 now. That would be 5x. That'll be if it goes to all-time high, it will be 5 times its current price. So if you buy now, you're guaranteed 500%. That's exactly what I'm saying. Well, as they say, not a financial advice, but I think it's a good money making opportunity. And I think for a coin that has this kind of momentum and community behind it. So as I said, it's a Binance Chain smart contract token, and it has the whole community of Binance behind it, and it's doing it. I mean, it's done fantastic in recent times. So by the time the second leg of the bull run kicks in, I think we're going to see some dramatic price, may get to $10, given the current, yeah, given the current behavior and performance so far. And in terms of, yeah, the supply is quite small, to 277 million. It's barely about a quarter of a billion. So yeah, if the market cap gets to, if the market cap gets to a billion, then you can expect that, or 2 billion, you can expect that we're going to see some serious price action. The last it got to was, yeah, 1.4. So by the time it gets to 2 billion, yeah, you can expect that. Yeah, exactly. As Dr. Lade said, you can stake it as well. You can stake it on Binance. I think you can stake it on another exchange. I can't remember now. So it's a good one to hold, both in the short term and the long term. I mean, it's you can stake it on Trust Wallet. Yeah, thank you, Dr. Lade. You can stake it on Trust Wallet. You can stake it on Binance exchange, and you can accumulate. I mean, it's a good point to accumulate. Like I said, if you didn't sell any of your tokens in the months of April and March and February, there's nothing to despair about, because even when you do sell, you will still regret that, yeah, you will still regret that you sold, because the market is so going to go up that you will still feel like, oh, maybe I shouldn't have sold. But as I've said, for most people who have need of money in the short term, maybe drop before by the end of the year, try to take out your initial capital. Once we get to, we're going back to 65K. That's it's a given. I might not be able to tell you the dates, but before, I'll tell you that before September, we'll be back above 65K. That's my impression of how the market is how the market is going. So I think this is a solidly high performing coin. It's a good opportunity to get in on the markets. So that's about the big token. Then let's go on to our, we spent so much time already. Let's go on to our vital signs. We've had some slight gains in the market, even though the sentiment is still dodgy and shaking. We've had some slight gains in the market in the last 1 week. We're now at 1.3 market cap, and Bitcoin is still slightly trailing altcoins in market cap. We've gained 110 billion in the last 1 week. Half, thereabouts, is sitting in altcoins as usual. More than half, actually, like 54% is sitting in altcoins. So it means that the volume is secretly or surreptitiously coming back into the market, even though, I mean, we're still sitting in extreme fair. We've been in extreme fair now for 6 weeks straight. Before that, we're in fair. Extreme fair means extreme opportunity to buy. Like I said, this particular index has never failed before over a 6-month period of time, ever. If you buy in extreme fair and sell in extreme greed, you are going to make money, guaranteed. Anytime you're going to make money, and it's not usually more than 6 months. So if you buy now and wait 6 months, or wait till any time when this gauge goes back to green, you are guaranteed to make money, 100%. I mean, we've not only back tested it now, we've had the opportunity to forward test it since September last year, when I first started having a look at this indicator. It's an algorithmic indicator checking on sentiment, checking on all sorts of things, social media sentiment, what people are saying, what the news is saying, what the market is saying, on-chain analysis, blended together. So it's been very consistent in its delivery. So whatever you think, if you think that money you're keeping in the bank is better than keeping in the Bitcoin, well, all well and good. What I can say is, if you buy now and you take it out 6 months' time, you will at least have doubled your money at the minimum. Anyways, moving on. in terms of where we are in the market, there are all sorts of theories flying around. Some people say we have hit capitulation and anger. Some people saying, we're in depression. Where people are saying, my retirement money is lost. How can I pay for this thing? Different different states of emotions. So in the short term, I think we're probably around here in the mini cycle. In the overall cycle, I think we're still somewhere between optimism and belief. What do I mean? The overall cycle, meaning the overall bull run itself, we've not gotten to euphoria. When we get to euphoria, you will know, because the prices will not make sense. You will definitely know when we get to euphoria. And it's almost like a clockwork. I suspect, anywhere between November and January next year, you will definitely know, because at that point in time, your portfolio is not going to make sense, even to you. And at that point in time, it's just the time to collect your coins and just go and wait on the sidelines. Anyways, in the short term, yes, I think we're sitting between depression and disbelief. But on the longer term, I think we're still here, because the big boys are not selling. Wallets are not losing their Bitcoin. So like what I was saying on chain analysis last week, was it last week or on the WhatsApp chat, that wallets are not losing their Bitcoin amounts like the end of the bull run. So at the end of the bull run in 2018, people were selling all the Bitcoin in their wallets, literally. But what is happening now is new wallets are being added and nobody is emptying their wallets. So regardless of what is happening for the price, you know that something different is going on. And I shared with you last week the balance of accounts and other things. I actually should have shared it today as well. In terms of technical analysis, not too much happening on the markets that I've not already talked about. We've started the week rather in a downtrend, if I may say. Well, we didn't start in a downtrend. We did have some pump earlier in the week, but now it looks like we're going to close around 33. If we close the week at 33, we're going to have a bounce, because what it means is that, sorry, let me go to 4 hours. What it means is that we're setting up for a new trend, this trend. So if we don't close this week below 33, which is where that red line that I have on the monthly chart is, if we don't close it above 33, it means that we probably started a new trend, and that new trend is going to take us back into the region of 36 to 40. What that does for us is that if we start going up like that, that means we don't have to meet this trend line, this older trend line, until we probably get to somewhere like 41, which is where the original support / resistance line was. Now, it doesn't mean that we're going to go up straight. We may go up all the way, zigzag, touch this, come back down, then go back and touch this and go back up again. But we're on an upward trajectory. I'm more than convinced that we bottomed out. Why did I say that? Like, I share this chart all the time. This is the monthly chart. The red line, the thick red line, is the 12-month moving average of the price of Bitcoin. The price has only successfully stayed below the 12-month moving average in the periods of the bear markets and when we had the drop last year during COVID. It has not. There is no single month since then that the price has successfully closed below that line. So even in the last bear markets, which was here, we didn't successfully capitulate into bear markets completely. If this is our indicator of bear markets, until like August, September in 2018. And we only remained below that moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9 months. And after that 9 months, which was April 2019, we started going upwards. And we've literally been going upward for the most part since then. Yes, we've closed November and January 2019, and November and December 2019 below it, but we've been sitting above it for the most part. And actually from September last year, we sort of deviated from it to the upper limit of the standard deviation for price. And right now, it's almost like just taking a major cool off. So now we've had 1, 2, 3. If this month doesn't break through, which it is not likely to, then we're likely going to end this month. This month's candle on a green candle, meaning the opening price is greater than the closing price. Same thing on the weekly charts, really. On the weekly charts, it's showing, in fact, it's showing more that we've tried to break it so many times and we've not been able to break it. When you have, usually there's a general, I don't want to call it, it's not superstition, but there's a general belief that once the price tries a resistance or a support line for a number of times, like at the 5th time, it's going to break it. But he's tried it now for more than 5 times. It's not broken it. 1, 2, 3, 4, 5, 6. This is the 7th time. I don't think it's going to break it. Some people say it's going to go down to 28. If it goes down to 28, it's not likely to close below 28 because there's a lot of buying demand there as well. So it's likely not to break it as well. So after testing it for a while, the market is bound to withdraw. So think about this level, which was around 60K. The market didn't really close above 60K for any week. See, 1, 2, 3, 4, 1, 2, 3, 4, 5. The market only attempted it 5 times. Once the market didn't succeed in closing above 60K 5 times, the market started to recoil. So again, I think we're going to have a correction because we've already tried more than 5 times now, and we've not been successful in breaking a particular support. So that's the way I'm looking at the market. In terms of market cap, in terms of market cap and Bitcoin dominance, I think we're going to have, where is that? No, this one. I think we're going to have some expansion in altcoins dominance once Bitcoin gets to 42. So usually what happens is when Bitcoin makes a gain in the markets, people try to sell off their gains to acquire more altcoins. Then when altcoins make the gain, trying to follow Bitcoin, people try to sell off their altcoins to acquire more Bitcoins. So there's that ebb and flow that I described. I think that was in February, March, that happens between altcoins and Bitcoin. So right now we're sitting at 46. I was saying here that we had the opportunity of breaking lower because this is about the lowest we've been since the last bear markets. Actually, the peak of the last bear markets, we were at 36%. That was the lowest Bitcoin has ever gotten to. In May, we got as low as 40. We didn't quite break 40, and then we started going up. But what happens since then is, even though we've tried to go back up, it's not a strong, upward trend. We're still below the median for the Bitcoin dominance. So what I think is going to happen is Bitcoin is going to make a gain in price, and then people are going to quickly sell off their Bitcoin to buy altcoins. Then that will push further down the dominance of Bitcoin, and then we'll make altcoins pump the more. I'll keep it at that for today because our time is fast spent. I want to talk about the regulation. There was a lot of questions from people on Binance, and especially in UK. I got a lot of notes from people asking me, is Binance banned in UK? Some people even posted some articles on the WhatsApp exchange. So here is what happened to explain it to the observing eyes or the ordinary man. Binance operates I don't want to use it by camera. It's not by camera. They operate it's almost like a holding company strategy. Many companies in the world do that anyway. You have a central holding company, which is like your headquarters in a tax haven. So in the case of Binance in Jersey, I think, or Cayman Island, I think they have one in Jersey, they have one in Cayman Island. They're holding companies, meaning they're like group holding companies where all their legal entities report into. So it's a very smart way to set up a global organization, because what it means is that it limits your hassles to the local entity if any hassles come up. So if I wanted to set up my company now, Better Things, I want to set up my company all over the world. I will have a holding company somewhere in Cayman Island or in Monaco or in British Virgin Island. And what will then happen is, because I have that holding company there, I can take profits from my companies within the countries into the holding companies and not have to pay capital gains on the profits I made. So sorry, I'm going to try to explain this for people that are not finance experts. So when companies trade within a country, the money they make in terms of profits get taxed. So they have what we call profits after tax and profit before tax. Their profit before tax gets taxed at different rates. So in the UK, it's around 21%, different for different countries. Now, that money that gets taxed, of course, will get paid to the government. The remaining, called retained earnings, form what you call part of the company's balance sheet. So that retained earnings is regarded as part of the company's assets. Now, it's like their cash reserves in the real sense of it. Now, those cash reserves, different companies have different strategies on how to manage their cash reserves. You see, your cash reserve determines the future viability of your company. Well, not necessarily your cash reserve. Your balance sheet, let me use that in a more accounting-friendly way, determines the future viability of your company. If somebody is looking at your financial statement and it looks over a 5-year period and sees that the value of your balance sheet is going down, to the ordinary investor, what it means is that your company is not viable or that the company is having problems. That's why the asset base is going down. However, if the asset base is going up, then investors are excited because they look like, oh, this company has prospects, might even be expanding or may be able to acquire other companies. So there are all sorts of scientific schematics and accounting schematics and corporate finance schematics that professionals, that go to school to study these things, apply to make sure that their companies look good on paper or in the books, as they say. Now, if a company is making profits, let's say in the UK, and then their retained earnings is in pounds, what it means is that if they put that money in the stock market and they make gains from it in the UK, they're going to pay capital gains tax on the money they make. So if my company made £5 million in 1 year, and out of that £5 million, I say that, okay, let's say my profit before tax is 4 million. I'm going to pay the United Kingdom 20%, 21% of that as my corporate income tax. Now, what is left of that? So let's say that what is left of that is like how much now? 3.1 million pounds. That's what is left. Now, that 3.1 million pounds is now sitting in my balance sheet as retained earnings, and it can be rolled over year on year. However, if that money is sitting in the bank, and let's say, of course, the bank is not paying interest now, but let's say the bank paid me 1% interest on 3.1, that would have given me 31,000 pounds or something like that. So I'll pay 20% of that to the government as capital gains on my retained earnings. However, if I have a holding company, because the holding company is the parent owner of my in-country company, I can take my, my 3.1 million. I can split it anyhow. I can say, okay, holding company takes 50% or holding company takes 60%. Then the money is offshore. What it means is the money is repatriated away from the United Kingdom to that holding company. What it then does is that money, when I warehouse it to an offshore company, the UK government will tax it as part of the corporate income tax, but that's the only tax they're ever going to get from that money. But once that money moves to Cayman Islands, it's off the radar of the UK government. So if I have companies like that in 10 other countries, I can pull all those monies together without having any governments having any oversight on the balance. What it then means that I have a stash sitting in Cayman Islands, which is not subject to tax, of course. I can only pay, whatever I need to pay in terms of, holding company tax within Cayman Islands, which is very, very insignificant when you compare with the developed world. So because of that, ensure that they don't have their holding companies in the developed world. They have their holding companies in tax havens. So that's why I said it's a very smart move for Binance, and I think it's one that's going to serve them for a long time to come. Because what it then means is that whatever profit they derive from any of those in-country legal entities, they're able to repatriate it away from the clause of the government, and they're able to do whatever they want to do with it. Because they can then say, want to start a new company in another country and then deploy the fund as foreign direct investments. So, in terms of Binance, what's happening with them is they bought this company, and the company is an FCA regulated company within UK, and they were planning to launch Binance UK this summer with the acquisition of that company. So they bought the company and then changed the name of the company to Binance Markets Limited. But what FCA is saying is you can't use the license of the company you acquired to run the operations of Binance UK Limited. And as a result of that, you need to go through the process that all the other companies, crypto companies within the UK are going through. I don't know if you get what I'm saying. There was an existing company that was a trading company in the UK that had FCA license. Binance bought that company, and Binance was trying to use the company to operate within the UK as Binance UK Exchange. So that is the ban, quote unquote, that the FCA is talking about. As a matter of fact, these guys are the one helping the FCA to draft a regulation for crypto, because as far as they are concerned, they have no idea, freaking no idea what is going on in the crypto world. So that's what's happened. And so many people have asked me, said nothing is happening to Binance. And as a matter of fact, even if the US was to challenge them to court, they have too much money. They have more money than Ripple. And Ripple has enough money. Like I told you before, that Ripple will not be defeated in court just because they have enough money. It might damage the token price, but Ripple can't be defeated in court because they have too much money that it made from the last bull run. And I mean, if you have money, you can get out of anything. I'm not going to say more than that. Please, if you have any questions, let me take your questions. What advantage are they hoping to gain by buying the company to use their license versus registry? Oh, a lot of advantages, actually. So you see, if they're registering a new company, there are too many hurdles for a new company when it comes to regulation. So for instance, if you have a new company and your company is, for instance, less than 1 year old, there are things you can't do. They won't even answer you for some things. There are some conditions you will not meet just because you are a new company. However, if you're an existing company that already has, an existing relationship, and as a matter of fact, has become FCA regulated, what it means is that you are already known and you already have the license. In this case, what FCA is shouting about really is that Binance does what you call derivatives. They have what you call futures trading, where people buy derivatives. Derivatives are not really, they're not really cryptos. They're just price derivatives. They're products. They're exchange-derived products that are fashioned out for the people who are, buying from them, their customers. So FCA banned derivatives from being sold to customers in, I think it was December, January this year. So because of that, most crypto companies in the UK can't trade derivatives again. So derivatives are like, it's almost like indices on stock markets. Indices on stock markets are not the actual stock. They're just a pool. But it's further than that, because derivatives can just say, we have BTC bear, which means we are trading the opposite of the price of Bitcoin. If the price of Bitcoin goes up, the price of BTC bear will go down, something like that. So you have derivatives like that, which have been banned in the UK. But because the FCA knows that Binance users are already more likely, Binance.com users or UK users from Binance are already on the main Binance.com exchange. And they probably know that they are exposed to that. They are saying that, you need to go through, your own verification process with this new Binance UK company. And as a result, that's why they're making that noise to say they can't trade in regulated product. Regulated product means derivatives. It doesn't mean that you can't buy spots or you can't buy and trade normally. People are very worried with the present state of crypto markets. What are your thoughts? Very simple. Human beings generally have very short attention span, and we're usually very consumed with what is happening with us in the present. I mean, I'm not exempt from that. So sometimes you have a problem and you're consumed with the problem that you don't have enough bandwidth to actually zoom out of the problem and try to like, okay, where is this problem coming from? Have I seen this kind of problem before? What does it look like? So the people who are very concerned, one, are people that are either coming into the market for the first time or have not been in the market to experience this before. People who have been in the market for a while understand that this is a normal market behavior. What do I mean? In a bull run, you have periods of ebbs and you have periods of flow, meaning you have periods that the price will go, skyrocket, and you have periods that the price will cool down. Now, the price cools down for various reasons. It's either triggered by normal events or triggered by market makers. Market makers usually trigger such events, and they look for opportunities. Let me not use that word. They look for opportunity to trigger the events so that one, they can sell off their holdings. Two, they can start to reaccumulate. There is a very bright scholar called I think Daniel Wyckoff that came up with an algorithm. It's almost like a framework that shows how market makers try to sell off their assets on the market and then try to buy it back without creating problems in the market. So you have a Wyckoff distribution and a Wyckoff accumulation. In fairness, I knew about this at the beginning of this year, but I never really thought much about it. But when I went back to check the charts, I found out that we were actually going through textbook Wyckoff distribution pattern all through January to April. And then we had this accumulation pattern that started in April and is playing out almost to the letter. So it's normal market behavior. We're still in the very early stages of adoption in the cryptocurrency world. Honestly, 10 years from now, we'll look back and be like, man, 2021, man, crypto was still very cheap that time because we are still in the very early stages. But it's not going to be that. I can bet you it's not going to be like that forever. One of the things that's going to change that is this adoption that you've had with corporate organizations putting Bitcoin on their balance sheets and sovereign nations using Bitcoin as legal tender. Except the president of El Salvador gets killed and the US installs somebody that cancels his decision, I tell you, that country is going to develop. Within the next 5 years, they're going to witness significant development. One, because their sovereign wealth is not going to be in US dollars. And if their sovereign wealth is not in US dollars, it means they're going to gain against the rest of the world. That's what it means. So if their sovereign wealth was $1 billion and they kept it in Bitcoin, and in 5 years' time, Bitcoin is 500,000 conservatively, what it means is that their sovereign wealth has grown in US value by how much now? My brain is stuck. But it's grown in US value from 30K to 500. That's almost 10 times, more than 10 times in 5 years. That is significant. I mean, take it anywhere, anytime. If your sovereign wealth has grown 5x in 5 years or 10x in 5 years, that is significant. And nobody can beat, you can't beat that. And he said, when countries start to adopt it, what do you predict will happen? When it runs out, the price is going to go crazy. At that point in time, if you have one Bitcoin, you'll be like a billionaire, to be honest. In fact, you'll be more than a billionaire, in fairness, because when it runs out and what I think is going to happen is Bitcoin's last block is supposed to be mined around 2041 or thereabouts. But I think it will happen before that time, because I know that there are now quantum computers that are able to mine block faster than the current computing, the ASICs that we have today, the ASICs nodes that we have today. So we might actually get to that exhaustion faster. Once we hit that 21 million number and, it finishes, of course, the price goes through the roof. There will be other, altcoins that will do well, that, people will try to adopt. Some countries will try to create central bank digital currencies. So US will probably move to their own US CBDC. But the price of Bitcoin will keep going up because except, something super cataclysmic happens, maybe, the Bitcoin networks gets forked into half again, which is very, very unlikely now because of the amount of transactions that happened, one, and because of the size of the network. For you to successfully hack the Bitcoin network now, you need to have enough power as much as Switzerland or Ukraine for almost 1 year to be able to break into the network of Bitcoin. So it's just a matter of time for people who are worried. In fact, I would say give it 6 months conservatively, which is December. But aggressively, I would say give it 3 months. You'll be shocked at what will happen with the price. The values are derived from the value. Yeah. So, Eugene, thanks for your input on derivatives. Yes, the value of derivatives are derived from the underlying security. It sometimes is the inverse. So you have inverse derivatives as well. So that was what was banned in the UK, December, January 2021. Any other questions? So when it runs out, it runs out. So right now, it doesn't look like it's going to happen. But when it happens, everybody will suddenly realize that people will be trading in sats. So sats are Satoshi. Satoshi is the smallest single unit of Bitcoin. So one sat is, how do I say it now? Bitcoin is about 10 million. Is it 10 million or 100 million sats? I think Bitcoin is about 100 million sats. Yes. So one sat is 1 raised to the power 8 of Bitcoin. When it gets to, when we exhaust the 21 million, of course, it means that people will start trading in sats. That's exactly what it means. Any other question before we call it today? I'm conscious of the evolution of GSM. I mean, a very interesting story happened to me personally this week. My daughter was asking me what my first phone was, and I laughed. I'm like, "Whoa, my first phone!" I had my first phone in uni, and it was like, "How old are you?" I was like, "I was 20. I can't remember 20 something." And I said that was around 2001, and that it was a Motorola Talkabout. In fact, I didn't find an example to show her what the phone looked like because I was driving. But I described the phone to her that the phone looks like a walkie-talkie. It was big, but that I was a big boy because nobody had phones. Nobody had phones back then in uni. And the masts were just being installed. I was just lucky that I think it was my cousin from the UK who had one of our old contract phones and decided to give it to me. And I instantly became a big boy because of because of that. So over and above the macro, in terms of what is happening, this is a significant technological intervention. And when I explain this to people, I said, think about this like the printing press. You talk about GSM, think about the printing press or the internet or the computer itself, the desktop computer. It has changed the way things are being done. It's because of the internet that we have everything we have now, from phones to quantum computing to even blockchain itself. It is because of the internet. It's because of the internet you have people like Amazon come out of nothing to become behemoth companies, even Apple, that are running the world. So it's something that it's a seismic technological shift that is going to affect not just the monetary system, but every other thing, because blockchain itself has, very versatile application across many areas of technology. So it's still the very, 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 very beginning because it's just 10 years plus now. By 2030, I'm sure by that time, Bitcoin will probably be over 1 million or probably 10 million or something. So it's going to be sat then, definitely, because there'll be, in fact, there'll probably be nobody that will be able to buy 1 Bitcoin at that point in time. Yeah. Blockchain using that has not started at all. We've not scratched the surface. We're at the very, very beginning of, and because on the one hand, you have Bitcoin gradually replacing gold as the storage of value. Gold analysts tend to say that, okay, if it's going to replace gold, it's going to become 10 trillion, like the market cap of gold. No, it's going to not to replace gold. It's going to take out gold completely. So it's going to grow in value much more than gold. It's going to be definitely much more than 10 trillion in terms of the overall market cap. So it's at the very, very beginning. Because you have technologies that have been built on the back of the advent of Bitcoin, like Ethereum, like all the smart contracts, like decentralized finance, those are even going to cause more explosion than even Bitcoin itself, because decentralized finance means banks no longer have any use for anybody, really. So we're just getting started, to be honest. All right, I think that's going to be a wrap for today. Thank you, everyone for joining. Yeah, totally, we can. Yes, definitely we can. We're working on it. I will allow you to go and watch, for people who are interested in football like myself, to watch the Belgium match. I think Spain managed to beat Switzerland on penalties, even against 10 men. Shame on them. Anyways, so have a lovely yeah. So somebody asked about what are the opportunities in this downtime. So I have a course coming up. I think that will be when it starts. I have a course coming up towards the end of the month. It's likely either the 23rd or the 30th of July. I'll keep you posted about the final dates next. It's most likely going to be the 30th of July on passive income opportunities for cryptocurrencies. So if you're interested, do let me know on the WhatsApp group. And I will let you know how we're going to go about that. So it's a class that I'm taking on the 30th of July, basically to expose people to opportunities that can allow you to compound your money or increase the value of your tokens or the quantity of your tokens while the market is seemingly in a range and the price is not significantly appreciating. So I'll talk about that more in the coming weeks. Do have a lovely weekend, everyone, and see you next week. Thank you very much. Bye.